Well, hello, my name is benjaminzmiller, and I am the managing director of a United Kingdom company, Alamo Mortgage Holdings. In this presentation, we're going to talk about how you can potentially earn a significant passive income when you purchase our corporate income bonds. We are able to offer hundreds of basis points over what you might be able to earn on UK gilts and other government bonds when you purchase our bonds. But before I go through that presentation, I'm going to just read one paragraph of this disclaimer and then we'll get started. So as accredited investors, you will be aware that all investments carry some level of risk. This investment is only available to investors who are able to assess their own appetite for risk. Please read the risk statement within the investment memorandum before investing. Okay. So let's talk about the history of the British pound and the US dollar, the exchange rate. And this is so relevant if you're a UK investor. It's something where over the years, you may not have noticed over the decades how much the British pound has lost against the US dollar. If we went back to Bretton Woods towards the end of World War II in 1945, one British pound sterling would purchase 4 American dollars. And then if we went to 1967, one British pound sterling would only purchase $2.40 US. And if we went all the way to the 1st of January 2023, one British pound sterling would only purchase $1.21 on that date. So the trend for the pound sterling is that over the decades, it has lost a tremendous value against the dollar. And that's relevant if you are receiving returns primarily in your portfolio that are pound-based returns. So if you're getting an 8% rate of return in British pound sterling, that is not going to be the equivalent to an 8% return in US dollars. Now, in the example here, we're looking at the long-term trend where the dollar strengthens against the British pound sterling. Of course, in the short term, it can sometimes go up and it could completely reverse course. I'm just showing you the long history. And that's something that's relevant because an 8% return in dollars could be better than an 8% return in British pound sterling. So let's look at what determines the value of a mortgage note. Mortgage debt, there's 6 main factors that determine the value. So if you're going to purchase mortgages, you need to know what these 6 factors are and the basic ideas of how they fit in. So buyer is one factor. Who is it that's the guarantor on the mortgage note? Is it somebody that is has maybe a reliable income like a government employee, or is it an entrepreneur that may have unreliable income? The collateral, what is the actual asset worth? Is there an appraisal? Is there a broker's price opinion? These things are all very important to know. The buyer's down payment. In general, if a buyer puts a large down payment on a mortgage note, there is far less chance of a default on that note later. The terms of the note, all other factors being held constant, if you can get a note that pays a higher rate of interest, that's more attractive than one that pays a lower rate of interest. What's the history of the payments? How reliably are the payments being made? Have the payments been made, for example, 5 years on time, every time on time? Or have the payments had a period where they are running 30 days late or 60 days late? These things influence the value of that note. And then, of course, the paperwork. Was it done correctly by lawyers, by accountants, this sort of thing? Not accountants, by lawyers that drafted the paperwork. Did it close at a title company? So here's an example to make this more concrete. We are looking at a property in the United States in Texas. This particular property was listed for sale for $120,000 US. And what you see here is hypothetical. I'm not showing real data. I'm just explaining the idea. The house was actually for sale for $120,000. I want you to imagine that a buyer came in and put down $20,000 with the seller, where the seller acted as the buyer's bank. This would happen because the seller cannot obtain bank financing. Maybe they're self-employed, maybe they don't have a high credit score, but whatever the reason, they can't get bank financing. The seller's willing to act as the banker, where they'll take a down payment, they'll take a note for $100,000, and let's imagine they agreed on a 10% rate of interest. This might happen because the seller said, well, why don't you just go to a bank And the buyer said, I can't get a bank to approve me. I'm self-employed and I don't have a good credit score. So that would be an example, and they might agree on a higher interest rate. The seller might insist on a higher interest rate. So at any rate, this works out to where there's a debt over time of, let's imagine that 5 years have passed and the buyer has done a good job, has paid on time. The unpaid principal balance on that $100,000 note will have been reduced to $96,574. That's as a result of 60 payments of $877 being made on time by the buyer. So in this example, as time goes on, the note has more and more equity. It builds up equity. Now imagine that the seller wants to sell the note. The seller's in a situation where they need cash, they want cash. At first they ask their buyer, can you please go pay me off? Can you get another mortgage? And the buyer says, I wish I could, but the bank still won't give me a loan. I'm still self-employed and I still don't have good credit. So that basically is where at that point the seller calls a company like Alamo Mortgage Holdings and says, hey, I've got this note. Would you purchase our note? And then we work out a deal with the seller. We are going to typically shoot for a little higher yield than 10%. 10% is not very attractive for a company like Alamo. We want a higher yield. We like yields that are in the 14, 15% range. But let's imagine that we worked out a deal to purchase it at a 12% yield. The highest offer we could make to obtain that yield would be $83,322. So if the seller said, yes, I will accept $83,322, even though the interest rate on that note is still 10%, the yield on the note, because we're purchasing it at a discount, has increased to 12% at that price. So this is the basics of how it works. And we are doing this over time, a lot of different mortgages, a lot of different packages. That's our vision. So at any rate, let's talk about bonds. I sometimes am asked by people, well, why would I buy bonds if there's inflation? They are so curious about that. They say, well, you know, there's a lot of inflation. The government's printing money. Why would I buy bonds? Well, good question, deserves a good answer. Rather than giving my personal opinion, I'm going to talk about a Nobel Prize winning economist. Harry Markowitz, he won the 1990 Nobel Prize for economics. He created what's called modern portfolio theory. And if any of you have accounts at BlackRock or Merrill Lynch or Goldman Sachs, a lot of the models that they use involve this modern portfolio theory in terms of how to actually build their portfolios that they suggest for their clients. So a lot of that financial advice that you're getting, sometimes the foundation of it is rooted in this modern portfolio theory. So at any rate, but when it came to Harry Markowitz's own portfolio, he didn't do that. He did something much simpler. He would take his portfolio and he'd put half of it in bonds and he'd put half of it in stocks. And then once a year, he would adjust. If the stocks went way high in value, he would sell some stocks and he would buy more bonds. Or if the stocks went way down in value, he would sell some bonds and buy more stocks. That's how Harry Markowitz do it. Now, I'm not suggesting you do it exactly that way. I'm just asking, calculate for yourself what percentage of your portfolio is in bonds. And I find a lot of investors that they love to stock up on that cryptocurrency. They just love that. They're just convinced that nothing can go wrong if they buy Bitcoin. Just wait until the supercomputer comes out and starts solving that algorithm. It may not work out so well for all of those that squirreled away money in Bitcoin. But at any rate, very volatile asset. Bonds are a classic. And the nice thing about bonds compared to cryptocurrency is it pays passive income. And that's important in retirement to have that passive income. So why do we do Texas? The United States is a large area. Why Texas? It's because we know Texas really well. There's 50 states. There's a lot of different states we could have chosen from, but we chose Texas. And Texas is a state that is winning. The real estate values in Texas are increasing, and that's good for Alamo, and that's good for our bondholders, because the more the real estate values in Texas increase, the better it is for Alamo bondholders. And that's why you should seriously consider working with Alamo, because we're in a state that's winning. The collateral's going up in value. It is fantastic. And that makes the security of the bonds even greater. So at any rate, that is the reason for Texas. What are some of the advantages? Well, folks, look, rather than trying to do this on your own, which frankly, unless you've gone through a lot of training and you really know what you're doing, it can be very dangerous to go buy notes on your own without knowing what you're doing. You need proper training, and there are people you can go to for that training if you want that. I can recommend some. I know some very good experts. I know Eddie Speed. He's amazing at training. Great guy. But at any rate, this is something that is important to know about. We offer maximum diversification. So you're getting not just one note, but you're getting multiple notes when you invest. That is one of the great things about it. You also aren't paying any fees. If I hear one more investor brag about their index fund and how low the fees are, it's going to make me smile. Because look, I know that you're proud of the fact that your index fund has a low fee, but the reality of the matter is, isn't no fees better than low fees? Well, I think it is. I think it's better to pay no fees. Now, that isn't a choice that you'll have to make. If you would prefer to pay fees to index funds, you can also pay fees to index funds, or you could do half and half and see which one produces better results. Maybe try some Alamo, try some index funds. If you've got an index fund, maybe sell half of your index fund, put half of it in Alamo. There are so many options available to you, folks. And we also offer interest payment flexibility. That is something that's important. We've got a great team. I'm not going to go through all of our backgrounds in this, but I've been an investor many years. I'm from the United States. I'm an American businessman, but my information's on the website. Marina Zaharelska, she's our international investment coordinator. She's so smart. She speaks 5 languages. She's learning her 6th language now, Portuguese. Very impressed. She's with our business development team. She likes to work with investors that are interested in buying bonds. We have Scott Wynn, who's in the mortgage note business. He has 30 years of experience, so very talented. He's an industry expert for us. Fred Hobbs, who's our director of mortgage servicing. He's a licensed mortgage originator in the state of Texas since the year 2000. He's also the founder and president of Texas Mortgage Capital. He brings a wealth of experience to the team. We have David Jones, who's our in-house counsel for the United States. He's a licensed attorney in the state of Texas. We have Mark DeRuyter, who's our chief technical officer. Very smart guy, has done a lot with mortgage software. Andrew Richings is a consultant. He's in the United Kingdom, and he helps us with questions of, the financial regulations, this sort of thing. So let's talk about some frequently asked questions. Why should you buy the notes? Well, it's simple. If you're looking for an above average rate of return, Alamo has the potential to deliver that. How long-term is the note? We offer 3 years, 5 years, all the way up to 50 years. We set the interest rate once per year, and you can buy a series that is for that long. So it's a good opportunity for you if you want to lock in a high rate. Can you put the notes into your self-invested personal pension? That's up to your SIP provider. If you need any help with that, just contact us. We know a lot of SIP providers as well. What type of investment is it? Corporate income bonds. Is it a regulated product? Well, no, folks. And that's part of the reason that we can pay so much more. We haven't had to go through the added expense of regulation. If we went through that expense, and we're talking about it at some point, maybe a year or two from now, we'll actually go through that. But for right now, we think people would rather earn the higher rates of interest than have us go through all of the regulation and then just reduce the amount of money that we pay them by whatever it costs to go through all of the expenses of regulation. So who can invest? Accredited investor, sophisticated investor, UK investor that meets those criteria, a business, a charity, come one, come all to Alamo Mortgage Holdings. How's the money protected? We have multiple layers of security on that, and I'll be happy to go over that with you in a one-on-one call. Can you invest in a company? Are joint applications permitted? Yes. How's the tax managed? It's very simple. We just pay all of the money to you. We don't deduct anything for taxes. And then you can decide what's the right amount that you need to pay for taxes with your tax expert. Are there any limits on how much you can invest? No. And we can absolutely support large placements from institutional investors. That is not a problem. We can support very large placements. Can I get access to the money early? No. We have it in the paperwork where you understand that it's for the term that you agreed on. We designed the financial product so that the money's available at the end of that term. That doesn't mean that we won't try to work with you, but in the paperwork, it's going to say no. How will I receive my interest? We just pay it to the bank account you nominate. How can you invest? Send me an email, ben.miller at alamomortgageholdings.co.uk. I hope that helps, and I wish you good luck with your investing.